Imagine this for a second. You finally decide to start investing, and almost right away, bam, you get hit with the single biggest stock market crash in history. Your friends are all calling you, saying you're absolutely crazy. They're begging you to sell before you lose every penny, but you don't. You hold on. And for the next 40 years, through one crisis after another, that one decision makes you a return of over 6,000%. I know, it sounds like something out of a movie, right? Well, that's a true story. And we're about to break down exactly how a dead simple strategy can deliver those kinds of results, even when it feels like the world is falling apart. Okay, so our story kicks off all the way back in 1985. You've got an 18-year-old who decides, you know what? I'm going to put my money in the stock market. And for the first couple of years, everything is awesome. The money is just growing and growing. And then the roller coaster started. First up, 1987, Black Monday. People were calling it a massacre. The market just fell off a cliff. Then, just as things start looking up again, the dot-com bubble bursts in 2000. All these tech stocks just went into a total freefall. A few years after that, we get the 2008 global financial crisis, the worst recession in generations. And, of course, most recently, the global shutdown in 2020. I mean, every single time the headlines were screaming that this was it. This was the end of the market as we knew it. But you know, through every single one of those massive downturns, there was this other challenge that nobody talks about: the people around you. My friends were absolutely panicking. They were telling me, dude, you have to pull your money out. Take what's left before it all goes to zero. The pressure to just give up was huge. So that investor, the one who lived through all of that madness and just refused to sell, yeah, that was me. I started this whole journey when I was just 18 years old, putting my money in the market, and I felt every single one of those terrifying moments firsthand. And what was the result of just ignoring all that panic and sticking with it for 40 years? A return of over 6,000%. To put that in perspective, if I had simply invested $250 a month through all of that chaos, it would have grown to over $1.8 million. This just proves this single most important rule of building wealth. Time in the market is so much more important than trying to time the market. So now that you get just how powerful this long-term thing is, you're probably thinking, okay, cool, but how do I actually do it? Well, it is so much simpler than you think. Let's break it down. First things first, two really crucial ground rules. Number one, this is just how I do things. It's not official financial advice, okay? And number two, before you even think about investing a single penny, you have to have a financial safety net. That means saving up 3 to 5 months of your living expenses in an account you can get to easily. Seriously, do not skip this step. The actual setup, you can do it on your phone in like 5 minutes. It's really just these 3 simple things. You open an account with a brokerage app. You deposit some money to get started. Any amount is totally fine. And a lot of these apps will even give you a free stock just for signing up. Easy. Now, here is a super important first step. You want to open the right kind of account, one that basically acts as a shield to protect your money from taxes. If you're in the UK, that's an ISA. In the US, it's a Roth IRA. Just think of them as these special wrappers you put your investments in, and anything you earn inside them grows completely tax-free. That means you keep way more of your money in the long run. The UK one's a little more flexible with higher limits and letting you take money out whenever, but honestly, either one is a fantastic tool for building wealth. Okay, so your account is set up, you've put some money in. Now for the big question. What on earth do you actually invest in? Well, the winning strategy, the secret that so many long-term investors use, it's actually kind of boring, but man, is it powerful. I want you to think about the music charts for a second, you know, like the top 40. The most popular songs, they rise to the top, right? And when a song starts getting unpopular, it falls off the chart and a new hit takes its place. The chart just automatically updates itself to show you what's winning. Well, an S&P 500 index fund works the exact same way, just with giant companies instead of songs. See, an index fund is just one single investment that automatically buys you a tiny little slice of the 500 biggest and most successful companies out there. Think Apple, Google, Amazon, the whole lot. So when one company starts doing poorly, it gets kicked out and replaced by a new rising star. It means with just one click, you own a piece of the entire top of the market. You're diversified. If one company fails, it barely even makes a dent. But here's where the real magic happens. It's when you take this simple strategy and you make it completely effortless. You just set it and you forget it. Let me show you what I mean with a little real-world experiment. To prove this works, my son actually ran a little test. For the last 3 months, he invested just £5, about the price of a fancy coffee, every single day into an S&P 500 index fund. Just a small, consistent, automated amount. And the result? After just 3 months of this tiny little experiment, a return of over 5%. Now, it's not a huge amount of money, of course, but that's not the point. The point is, it proves the concept works. Small, consistent investments, they add up and they start growing right away. And this right here is the absolute key to long-term success. The best strategy is the one you don't have to think about every day. Automation is your best friend because it takes all the emotion and all the second guessing out of the picture. And setting it up is so easy. Most of these apps have features for it. Sometimes they're called pies or recurring investments. You just pick your index fund, you set an amount to invest automatically every week or every month. And this part is super important. You choose an accumulating fund. All that means is that any profits your investment makes are automatically used to buy more of the investment. It's like putting your growth on a compounding machine that just runs on autopilot. It totally supercharges your returns over time. So we've covered the why and the how. But there is one last piece to this puzzle, and I promise you, it is by far the most powerful force in your entire financial life. It's not about how much money you have. It's all about how much time you have. Just look at this chart. It explains everything perfectly. If you start investing just $250 a month at age 25, you are on a path to have over $1 million by the time you retire. But look what happens if you wait just 10 years and start at 35 instead. You end up with less than half of that. That 10-year delay costs you over $500,000. Time is the most valuable asset you will ever have. So there you have it, the simple, proven, and yeah, kind of boring strategy to build life-changing wealth. You don't have to be a genius. You don't have to be a big risk taker. You just need to start, you need to be consistent, and you need to let time do all the heavy lifting for you. You know exactly how it's done. So the only question left is, what's stopping you from starting today?